Assalamu alaikum. Dear student, in the previous lecture, we completed Mr. N question. Okay. Now let us discuss the remaining two concepts relating to pension. So that in that way, after discussing the remaining two concepts or rules on pension, your pension topic will be completed, inshallah. The numerical part of pension will be completed. You can say this. Let me explain the new concept. Basically, the new rule relating to pension. What we did in Mr. N question and before that, we used to do one thing. Whenever we saw gross PPC in the question, immediately we were doing one thing. What were we doing? We were doing increase basic rate band limit, which is 37,700 plus gross PPC. In case of high rate band, 150 plus gross PPC. So this is what we used to do previously. But according to HMRC, basically, there's one more rule relating to the restriction on the band extension. What is that restriction? Actually, pension relief is restricted, band extended lower of gross PPC, and over here it is higher of 3,600. Another point is total of relevant earnings. Relevant earnings means three earnings: employment income, trading income, furnished holiday letting. Of course, we have not studied employment income, trading income, furnished holiday letting. Definitely we'll be studying after this pension topic. Inshallah, we'll be starting. I think we'll be starting property income. So in that property income, you will be learning, inshallah, furnished holiday letting as well. But right now, just take it as a rule. What it says: total relevant earnings means three things: employment income, trading income, and furnished holiday letting. So ban is extended lower of gross PPC than higher of 3,600 and total of the relevant earnings. For example, just an example. Assuming the relevant earnings are 70,000, then obviously higher of 3,670 is 70,000. But if gross PPC is assuming 80,000, if the gross PPC is 80,000, in that case, your basic rate band and high rate band will not increase by 80,000. Then your basic and high rate band will increase by 70,000. Because they are saying band extended by lower of gross PPC and higher of. Assuming higher of is 3,600 and total of the relevant earning. Assuming the total relevant earnings are 70,000. Total of the relevant earning amount is 70,000 and the gross PPC is 80. Then the band will be extended, basic and higher both, with 70,000. If I change this, for example, just a minute. What is this? If, for example, assuming the relevant earnings are 70, so higher of is 70,000, but the gross PP is 60. If the gross PPC is 60,000, then basic and higher rate band will increase by 60,000. So just wanted to give you the idea. From here onwards, whenever you see gross PPC in the question, you need to check for the band relief, pension relief restriction. So which says band extended lower of gross PPC and higher of. Higher of is 3,600 in total of relevant earnings. And we have three types of total of relevant earnings means employment income, trading income, and furnished holiday letting. When do we need to check this band extended by? The hint is whenever PPC is given in the question. Let's see this. Again, dear student, please do not get confused with these numbers. Leave these numbers. Mr. Z has a property income 37,000, trading income 7,000. He made pension contribution of 12,000 in personal pension plan. He has unused annual allowance from the previous year 26,000. We are just supposed to calculate tax payable. So it's very, very simple. property income and trading income both are non-saving incomes. So let me solve here. Name of the question is Mr. Z, so that you should not get confused. Which question is this? Property income is 37,000. Property income is 37,000. Trading income is 7,000. Trading income is 7,000. Okay. If I add both of them, so I'll get 44,000. Total income is 44,000. Okay. Let us deduct personal allowance, which is 12570. Here comes your taxable income. 44,000 minus 12570. It is 31,430. Obviously 31,430. Entire amount falls in basic rate band. So very easily we can calculate income tax payable. Here comes the final answer. Income tax payable. 31,430 into 20%. Dear student, I'm getting this 6,286. Income tax payable, the answer is 6,286. Now, just check. Obviously, the taxable income is so less, band increases or not makes no difference on the answer. But again, for the sake of understanding, let's see the band will increase with what amount. The rule says band extended lower off. Let's apply this on this question now. Gross PPC. Pension contribution is 12,000. Whenever nothing is mentioned, it is treated as net. You have to gross it up. To convert this 12,000 into gross PPC, all you need is multiply this with 100 divided by 80. So the gross PPC is 15,000. Total of the relevant earnings. There are three earnings which are treated as relevant. Employment income, which is not in the question. Trading income, it is in the question, 7,000. We do not have any furnished holiday letting in this question. It means it is 7. So logically the band will increase, basic and higher rate band will increase by 7,000. But since in this question the entire taxable income is already falling in basic rate band, so there's no need to show extension of the bands. But again, if needed, then in this question we would have increased basic and higher rate band both with 7,000. Again, dear student, please do not get confused with this. We are doing Finance Act 2022. Please leave this. Mr. Z has property income 46,000, employment income 13,000. He made a contribution 16,000 in personal pension, and his employer also made contribution in occupational pension plan of 9,000. He has unused annual allowance of allowances of the previous year 15,000. Okay. Simply we need to calculate income tax payable of this question now. Let's see again. Property income is a non-saving income. Employment income is a non-saving income. Property income. $46,000. Employment income is 13,000. He made a contribution of 16 into personal pension plan. Okay. When individual is contributing in PPC, that is not treated as an expense. Employer also made a contribution in occupational pension plan 9,000. This 9,000 is an exempt benefit. So no need to, you can just show the exempt benefit. Employer's contribution. Employer's contribution in OPPC is exempt benefit. Is an exempt benefit, which means the total income is 46,000 plus 13, that is 59,000. Simply I have added 46 and 13. Let us deduct personal allowance, which is 12570. Let us see the taxable income. Taxable income. 59,000 minus 12570. Taxable income is 46,430. Taxable income is 46,430. Okay. Now let us just quickly check the band will increase with what amount. Actually, band will increase lower of gross. Let me make that over here. Band will increase lower of gross PPC. Mr. G has contributed 16,000. Nothing is mentioned, then it is net. We have to gross it up. So take 16,000 multiply by 100 divided by 80. Let's see what we are getting. I believe 20,000. Yes. Then higher of 3,600 and total of the relevant earnings. In relevant earnings, there are three earnings: employment income, trading income, and furnished holiday letting. In this question, we have employment income of 13,000 only. So higher of is 13,000. Then lower of, obviously the band will increase with 13,000. Look at this taxable amount, which is 46,430. The basic rate band is 37,000. The limit of the basic rate band is 37,700. If we add 13,000 into that, 37,700 plus 13,000. Dear student, I'm getting 50,700. So the basic rate band limit is 50,700. So it can be seen in the question. The taxable amount is 46,430. So the entire 46,430 actually falls in basic rate band, where applicable tax rate is 20% because every income is coming from a non-saving source of income. So simply if I calculate income tax liability, it's very simple. Income tax payable and income tax liability. Just take 20% of 46,430. If we take 20% of this, 46,430, 20% of this, we're getting 9,286. We're getting 9,286. So the income tax liability is 9,286. Again, in this question, the main objective was just to show you that the basic and higher rate band will increase by exactly what amount. So that is actually 13,000 in this question. So whenever in the question personal pension contribution comes, so dear student, you need to check that band will increase exactly with what amount. Now, another rule which we need to discuss relating to annual allowance 40,000 limit is, actually we know that in Finance Act 2022, even in the previous Finance Act, pension annual allowance limit is same, which is 40,000 pound. Now the question is, when this annual allowance 40,000 limit reduces, like we have studied relating to personal allowance, if someone is having adjusted net income, let's say more than 1 lakh, then personal allowance reduces. Something like that, we also have an annual allowance of 40,000 pound which relates to pension. There are two conditions. If both the conditions are met, then you will not be getting the annual allowance limit of 40,000, you will be getting less than that. So what are those two conditions? Restriction on annual allowance. Restriction on annual allowance for high income individuals: when the threshold income exceeds 200,000 and adjusted income exceeds 240, then annual allowance reduces. Annual allowance reduces adjusted income minus 240 into 50%. But two conditions must be met. How do we calculate threshold income? Actually, this is the format of threshold income. This is the format of threshold income. Net income minus the individual's gross PPC, you will get threshold income. Previously, we used to say the same thing, same income as adjusted net income. So if your threshold income, this amount, is more than 200,000, it means condition 1 is met. The second condition says adjusted income exceeds 240. How do we calculate adjusted income? Look at this. Let me calculate that adjusted income for you. You can say total adjusted income. Total adjusted income. How do we calculate total adjusted income? Just a minute, students. Simply you have to take net income. In this net income, dear student, we add maximum 3 contributions. Employees contribution in OPPC. Employees contribution, this time we are adding in occupational pension plan. Add employer's contribution. Add employer's contribution. If employer is contributing for the employee, either in occupational pension plan or personal pension plan, PPC. The final answer is called total adjusted income. If this final answer exceeds 2,40,000, then we will say both the conditions are met. When the threshold income is more than 200,000 and adjusted total adjusted income is more than 240, total adjusted income is more than 2,40,000, then you will not be getting the entire annual allowance of 40,000. It will start reducing. But dear student, let me tell you one thing. Some of the students, they just get confused in these formats. Basically, you have to memorize these formats. How do we calculate adjusted income? How do we calculate threshold income? Because if you're not memorizing these formats, then you will be having a problem. If I talk about tax, in taxation, of course, normally examiner does not have too much focus on these threshold income. But when it comes to ATX, both the conditions must be met. Must be met. Threshold income must be more than 200,000 and total adjusted income must be more than 240. When both the conditions are met, only then your annual allowance limit reduces. Okay. Annual allowance cannot be less than 4,000. So maximum it reduces to 4,000. What does it mean? Let me explain. Assuming, again, dear student, please do not get confused from this. Finance Act 2022, you people are studying. Okay. For example, someone is having, let's say, threshold income more than 200,000 and adjusted income, assuming, just to explain you, let's say, adjusted total income or total adjusted income is the same thing. Please do not get confused with these terms. Assuming adjusted total income, I'm just giving you directly the answer, data. Adjusted total income, assuming it is 300,000. And let's say threshold income is more than 200,000. Threshold income is, let's say, more than 200,000. Okay. They just want to ask us calculate annual allowance available for the pension. We know that in Finance Act 2022 and previously, annual allowance of pension has the same limit. Annual allowance of pension is 40,000 pound. But this 40,000 will reduce. Less adjusted total income is 300,000. From this 300,000, dear student, we'll be deducting 240, which is fixed. Then take 50% of this. You will get 30,000, which means annual allowance In the current tax year, assuming which is 22-23, in this question is only 10,000 annual allowance limit is available. No more 40,000 is not available, which means that assuming this individual does not have any previous unused limit of annual allowance, and in the current year, if this individual contributes more than 10,000 pound, contributing more than 10,000 pound will result in annual allowance charge. Another possible data, let's say annual allowance for the pension is 40,000 pound. Okay, less the reduction, assuming threshold income is exceeding 200,000 and adjusted total income is just an assumption, it is 4 lakh. From this 400,000 you will deduct 240, then take 50% of this. Obviously 400,000 minus 240 results in 160. If we take 50% of 160, which is 80, but what I'm writing, instead of 80,000 I'm writing 36,000 with that static. What is it, static? Doesn't look like a static, but it's okay. Minimum annual allowance limit. Annual allowance limit is 4,000. Basically, annual allowance cannot become zero. Like in personal allowance, we have seen personal allowance can become zero, but annual allowance limit cannot be zero. The minimum annual allowance limit is 4,000. So annual allowance cannot go below 4,000. So that is why instead of deducting 80, I've written 36. And then over here in the static will show that minimum annual allowance limit is 4,000. Annual allowance limit is 4,000 pound. Cannot go below 4,000 pound. So dear student, whenever the threshold income is more than 200,000 and adjusted total income or total adjusted income is more than 240, then that particular individual will not get annual allowance of 40,000, then annual allowance of 40,000 also reduces. But I just mentioned for the sake of your information or knowledge, when it comes to tax, basically in tax, examiner normally does not focus so much on threshold income. He focuses only on total adjusted income. But when it comes to ATX, obviously you have to concentrate that both the condition must be met. One is threshold income must be more than 200,000, another is adjusted total income must be more than 240. Only then annual allowance limit reduces, and it can be minimum can be 4,000, it cannot be zero. So simply thank you very much watching this lecture. In the next class, I'll be discussing a little bit again on the pension, that what is the pension age, if someone reaches the pension age, how do they extract their pension income. We'll be discussing that. And after that, inshallah, we'll start property income. Don't worry at all. So simply thank you very much watching this lecture. Have a nice life.